Chris Weston's the head of research at the Aussie Forex and CFDs broker Pepperstone. He joins me now. Chris, thanks so much for your time. Look, just looking at the markets, there's a pretty muted reaction here to the US strikes yesterday. Are you surprised at all by that and how things are tracking?
I don't think I'm overly surprised, and obviously I'm saying that with the benefit of hindsight, on the reaction of equity markets. A lot of people have been saying that the sensitivity to the geopolitical issue in equities has been fairly low. History has shown us that any sort of geopolitical issue is very short-lived, 2 or 3 days before people come out and buy it, buy stocks again. There's very much a buy the dip mentality across global equities at the moment, and earnings momentum is reasonably solid. So I think the equity move doesn't necessarily surprise me, and I guess S&P futures are pretty flat, and it makes me say, well, if this is the reaction we're getting amid the conflict and the escalation, which we're still obviously waiting for Iran to come back and counter the response, you've got to ask yourself, what happens when we do get an agreement of some sorts, whether that comes, what the stock market does in that situation. It probably rallies pretty hard. But, obviously, I think when we're looking on a cross-asset basis, I am surprised by the reaction in gold. Gold's actually lower today. Maybe it's priced in, some sort of poor scenario playing through. But, the fact that gold's down today is a surprise. And the fact is that we saw Brent prices trade up to $81 and we're down 3.5% from that high from that point. So, I think the market is giving a pretty defiant message about what it's currently pricing in. But certainly surprised by gold and the reaction in crude today.
Yeah, gold, big surprise. Normally you'd expect investors to buy into that safe haven. But I think the fear, of course, is that the conflict's going to escalate further and Iran might start striking back at some point. I mean, what does your sort of doomsday scenario look like for markets if that does happen?
Well, I think all roads in the equity land still lead to buying the dip, and if we were to see, for equities to really pull back, more than 5% on global equities, I think you really need to see the crude price pushing into $100 and staying there for a long period of time, and that would obviously then throw conjecture about consumption patterns and the idea about where inflation's going at a time when tariffs still really need to feed into the market pricing. I don't think necessarily that's going to happen. We need to be open-minded to all possibilities, but that would be the situation that causes a downdraft. But then again, as I say, I think people go and buy the pullback in that, and the banks should support our market. I think that obviously the tail risk for markets here, and the thing that we're looking out for, the signs which could see what is a calm market today turn into something a bit more volatile, would be to do with the Straits of Hormuz. Everyone's been talking about the idea that this is the cargo, the shipping lane that really does need to be looked at very closely. I still believe that the chance of a severe disruption or a closure is less than 5%. I know some people are sort of saying it's more probable given what we saw on the weekend. I think the other way to look at the Straits of Hormuz is more about the cost of insuring vessels and the cost for cargo going through there, because given what we've seen from the antics from the weekend actions, what we should see is insurance rates really going up quite sharply, and that could have an impact on the supply of crude and gas prices as well, which could keep gas prices elevated at these levels. So I think that's really what I'm looking at, and that's probably the tail risk here. But we're looking for Iran's response, and then we'll probably get a bit more clarity about how we can price risk in this market. But I think those tail risks are something that the market is telling you today is still a very low probability, hopefully anyway.
Yeah, because the market's always looking 12 months ahead, and market hates uncertainty, and there's obviously a lot of uncertainty right now. But when you look at where shares are trading, they're actually trading at very elevated levels.
Well, there's always uncertainty in the market. It's a question of how much uncertainty is. And our job as investors and in my case traders is to try and price that certainty, try and understand the distributions of outcomes, and try and assign a sort of probability to those outcomes. And when you see an outcome at a certain level, that's where you'll hold your conjecture. But I think given where we are at the moment, I think probably the market is pricing in an element of supply shock. $80 barrel Brent crude is pricing in that barrels will be that exports from Iran will be impacted to an extent. So that's probably why we're seeing sellers from those highs today, because it's partly priced in. But I think at the moment, the visibility around the geopolitical issue is at its poorest. And that's typically when people look to make statements. But yeah, we've still got to look at the other sort of macro issues that are playing through. What's happening with the US labour market? Is the Fed behind the curve? Should they really be worried about tariff impacts on goods inflation? It's something that Chris Waller from the Federal Reserve said he's looking through that, and the Fed should cut rates sooner. But we're going to see a lot of Fed speakers this week. We've obviously got the big beautiful bill which still needs to pass by the 4th of July, and that we're concerned about what that means for debt loads. The tariff rates, the deadline's due to expire in 18 days, and that's going to be something that is another factor on Trump's plate as well. So there's a lot of uncertainties, always uncertainties. It's the question of, do those uncertainties lead us to want to hedge some of our positions, take some equity or risk off the table? At the moment, the market's saying that we're not prepared to do that.
Chris Weston from Pepperstone, great to have you on the show.
My pleasure. Thank you.